Welcome back to the Investing on a 9 to 5 YouTube channel. It is your boy, the Dividend Dog. Got a video here packed for you called the best Mag 7 stock to buy right now. And I've been adding to it a lot in my portfolio. And we'll be going over that stock using a new stock analyzer through chartmill.com that I was able to get access to. So shout out to Chartmill. Christoph, the co-founder, reached out to me and he let me gain access to the website. And basically, yeah, let me use the website to do an analyzation of the stock. And I think it's pretty cool. And basically, this is their fundamental website in chartmill.com. I'm no affiliation with them, just basically just showing this just to give them a shout out for allowing me to get access to the website. But you can break down the stock from a fundamental analyst report, technical earnings, stock charts, and so on. And it can give you these easy, readable reports that can really give you the deep dive of stocks that you're doing deep research on for long-term investing. You have all of these tools available. You can see on the left-hand side here, you got sectors, market monitor. You can see the stock market. You see trading ideas, news, different types of blogs. You can see all different types of, perspectives from the market, all basically built for your convenience. You can do there's all types of pre-configured screens in here, such as this one here for dividend investing, where you can just go and set all different types of metrics up for looking for different stocks that you will want to add to your portfolio, or if you're trading options and so on. So give them a look, guys. Chartmill.com. I'll have the link in the description below. So before we dive into the video, guys, with the stock, I want you guys to just ponder on this thought here, or ask yourself this. When you're thinking about investing into a company, if you're a new investor out there, or if you're just an investor that just maybe fluttered and looking for your next company, and you have an eye on a company, but you're still trying to wonder if you should put your hard-earned money to it. These are just some of the questions that I ask myself to help me, realize if this company is, good enough to be in my portfolio. So do you understand the company's business model? Just straight up, do you understand like what they do and basically who they are? Where does their revenue come from? Like, do you understand, what type of products they sell? What are their main products? Is the company, innovating its services or products over time, competing with competitors, in its sector? What are the consumers saying about it? What's your friend, or maybe you've heard something on the news, or maybe you saw something while you're at one of the stores, such as Starbucks. What are people saying about the product, about the company? And then also, check out the company's website, and the apps. Do they have high ratings? Do they have high volume of traffic? Do they have lots of customers that depend on the website for either for money for themselves and so on, such as Google and such as Amazon, which is one of the companies, which is the company that we're going to be going over today. But if you guys are wondering, who the heck is the Mag 7? Well, there's 7 magnificent companies. I'm kidding. But there is 7 companies in it, and they're obviously magnificent. You got Alphabet, aka Google, Amazon, Apple, Meta Platforms, Microsoft, Nvidia, and Tesla. These are all great stocks to own long term, in my opinion. Obviously, this is not financial advice, but I mean, if you're looking comparing, if you should invest in any company, obviously, these are some of the top companies that are getting used the most every single day throughout our lives. But today we're going to be going over Amazon, which I think has the most upside than all of these here, and we're going to go over why. One, share repurchases. Now, if you're wondering what share repurchases are, if you're new to the stock market, it's basically when a company buys back its own shares from the stock market. It's basically like you're going to go buy Amazon. Well, Amazon's going to go buy more of their own shares too at the same time. Now, you're wondering, why would a company buy back their shares? Well, share buybacks matter too. And all of the companies that we mentioned in the Mag 7 at some point in time have bought back shares in their company. Now, these are all 4 ways or 4 reasons why a company would buy back their shares. And the number one reason is undervaluation, which means that the stock is at a lower price, and long-term thinking, they think they can buy a bunch of it right now and make a return on invested capital later on down the line when the stock does return back to all-time highs, because they work there. So they see what is becoming of the company while Mr. Market is mispricing the company. Efficient taxation, such as dividend payments and so on. So they don't want to create a dividend, therefore, aka, which would be dividend payments for taxes income. And then, although growing, stock prices are not, so they would rather buy back the shares instead of creating a dividend. But Google, instead of buying back their shares, they created a dividend. Amazon didn't create a dividend. What they did, they bought back shares this time, which I think is awesome and a great time for them, because this is the first time they're actually doing it. But buying back shares also improves your financial statistics. It helps the company's earnings per share ratio increase. The rapid influx of investors artificially inflates the stock's valuation, thus increasing the stocks or the company's PE ratio. Then a return on equity receives an automatic boost too. So by buying back shares, you help boost up your financial talent or your financial statistics, or AKA it helps boost up your balance sheet. And then also reduction in the cost of capital. So buying back some or all of outstanding shares can be a simple way to pay off some investors or reduce the cost of capital. So these are all great for reasons why a company will buy back shares, and why buyback or share buybacks are important when looking at a company long term. So if a company is buying back shares, or you find out a company just bought back a ton of shares, it's probably an indicator to go check out that company to see why they're buying back their own share and the stock price is down. But normally, my thing here is because they believe that the company is definitely undervalued. Now, in the last fourth quarter of 2023, last year, these are the quarter four 2023. These are the companies that basically bought back the most of their shares. So as you guys can see, Apple and Google and RTX, General Motors, Broadcom, Meta, ExxonMobil, Microsoft, Visa, and Comcast all bought back a lot of their shares over or in the fourth quarter of last year. Apple bought back 22 million. Same thing with Google at 16 million. So that means that they see value of their company. For example, RTX quarter four 2023 bought back 10 million of their shares. That stock was not at 105 or where it's at today, back in quarter four 2023. So that means that that company now has made a profit on their stocks. Same with GM. Same with all of these companies. So now you guys can see when the companies are buying, aka buying the dip on their own company, probably a good indicator to go either put some funds into that company, especially if you see them and like them long term, or go check out why they're buying that company back and see if it's worthwhile holding into your long term portfolio. So as mentioned, guys, we're going to be talking about Amazon here. Ticker AMZN. I love this company to death. It is, a stakeholder, huge stake in my long-term portfolio. Closed out at 187.48 on Friday, guys. Still at a peg forward, as we've talked about on the channel. They price in the PE and the earnings forward, essentially, for growth, and you get a 1.6. So anything around 1 or below that is worth value, but Amazon's at a 1.6, so I definitely think it is very, very fair valued. Right now, fair value at 211. We're still at 187.48. Still having a hard time breaking across that 189, 190 marker. We hit a little 52-week high last week. But year to date, we're up 23%. 1 year, we're up 75.8%. Last 3 years, you see 13. Last 5 years, 97.4. So we see a lot of consistency and a lot of good things here waiting on Amazon. So as we talked about on stock buybacks, last July here, Amazon bought back $3 billion worth of their shares. This was the first time that they ever did this. This is the first. Last year they bought back $3 billion worth of their shares, which is huge. Or back in 2022. I'm sorry, I said 2023. Meaning that back in 2022, Amazon was a cheaper company at that time, I think. But that means that they saw the value of the company in July of 2022. So it's probably a good reason to take a look at Amazon at that time, even though the stock may have been performing bad in 2022 compared to what it's doing now, because Amazon's at the same price that it was in January, back in 2021, 2022, I think, than it is now. But they're a way different company. They've got a lot more things working for them, and we're going to take a deep dive into that. So, got a price target once again. On tip ranks at $220. We're priced at 187 right now. So a little bit, we got 17% upside here. Bullish. We got 41 ratings. This is huge. Strong buy. Once again, not financial advice. Below, you guys will see that Amazon here is 21% of my portfolio with a cost basis. We got about $9,800 in there. We're up 19.3%. We were up 20% yesterday. Rounded it out about $2,000, and we got a total market value just in Amazon at 11K. But goal right now, I think that's puts us at about 62, 63 shares. When my goal is to get 100 shares of Amazon by the end of the year. Hopefully, we get it before this thing starts taking off, above 200 and move to the upside to, all-time highs and so on. Just to give you guys a little flashback here, this was an article printed out back in 2022, basically saying that Amazon was the worst performing stock in 2022 since at the time dropped 16%, declining in sector, slowest growth for the quarter since 2001. But there was an activist, Dan. He looks like he's a huge investor that has a lot of Amazon shares. Basically, told investors on a private call that he sees about a $1 trillion in untapped value at the company, which I think is true because you guys will see here in a couple of slides that Amazon may be a $1 trillion company here in the next few. Now you're wondering, should I buy Amazon now? Well, I've been buying Amazon a lot. Not financial advice. I love the company. I love what they do. I think they own the consumer from a way better standpoint than a lot of companies that were mentioned in the Mag 7. So as you guys can see, this is the entire ecosystem for Amazon. I mean, they have a bunch of subsidiaries where the consumer can always find a product or a solution to their problem. And that's literally how companies make money. They find solutions to consumers' problems or the world problems. And Amazon is doing that with their wonderful ecosystem here, as you guys can see. Now, last quarter, or for the first quarter, Amazon beat expectations. First quarter financial report. Revenue increased 13% to about 143 billion as advertising and cloud services sales growth accelerated versus the prior year, which is awesome. Operating margin expanded 700 basis points. Great earnings report from Amazon. Broken down here, you guys can see the online stores brought in $54.7 billion, up 7%. We're up 16% third-party seller. Huge percentage up here with Amazon Web Services. And this is only going to grow more, guys, as more companies have to budget for how they're going to use AI to their advantage to help their companies grow. And once we, get more and more developed with AI and how it's going to help life and so on to help companies improve internally, Amazon Web Services, I think, in my opinion, is going to continue to grow. You got advertising services up 24%. Prime Media, with advertising, subscription services up 11%. You got Twitch and you got Prime and whatever else. Physical stores up 6%, and other, I have no idea what it is, but it's up 23%, which is all good with me. Total revenue, we're up 13%, $143 billion in quarter one of 24, which is huge, guys. Now we're going to use Chartmill doing some basic checks here. Now, this is one thing that I liked about it. For any investor, whether you're new or experienced, it can give you a quick rundown of the company. Basically, we invest in companies that are profitable. In the last year, Amazon was profitable. In the past year, Amazon had a positive cash flow from operations. We need cash flow. Cash flow makes the business grow, especially if they're not paying back the dividend. Amazon had a positive earnings in the four of the past 5 years. Great consistency. All ratings reported positive cash flow from operating. Huge. As you guys can see, this is a great thing about Chartmill that I like. They're very, very great on making the charts easy to read. And as you guys can see, Amazon's been improving, except for 2022, where everything was going bad, but they were going through a change here, and they were making some changes, in house and so on. But now, and they were making some investments as well to acquire different companies. And now those investments are starting to pay off for them here last year in 2023, and definitely going to start paying here off for them in 2024. They also got some ratios: return on assets, return on equity, return on invested capital, all in the green mark here. All consistency, keeping up with the sector here. Amazon has a better return on assets than 72% of its industry. Awesome. Return on equity, 17.39% as compared to the rest of the industry. Amazon outperforms 72% of the industry from a return on equity standpoint. As you guys can see, ROIC, value of 10%, and that is performing 75% better than the industry. And guys, we know Amazon. Everybody shops there for quick and needy things, or if you that's where you go and get your products and stuff. That's a great way to help yourself grow your portfolio, is by investing in things that you use and consume. So next up, we'll look at some margins. Amazon has better profit margins, great operating margins, great gross margins as well. These are all good things here. Looking forward with Amazon. Operating cash flow back in 2021 and 2022, when they bought back shares, they were betting on themselves that they were going to get themselves out of the hole. This is when they bought the $3 billion worth of shares here. Now the company is worth in better position now, and the stock is growing. Even from a debt standpoint, they can pay off a lot of their debt. Takes about 1.81 years of free cash flow, which is good, which is better than 69% of their industry. So that means that the management team knows what they're doing with their balance sheet. They are not racking up a lot of debt, or not paying the debt off, or not good with pricing and operating and making sure the cash flow is covering not only free cash flow, but also covering debt and paying that down as well. So management is doing a good job with that. From an earnings per share standpoint, for the future, revenue growth for 3 years, 14%. Quarter two, 12%. Revenue growth for the last 5 years, 19%. Earnings per share growth the last 5 years, 23%. Earnings per share the last year, 308%. You guys can see the revenue has been growing about 19, 20% last 5 years. That is double digits. That is a perfect clip to be in. This is a great stock to own long term, in my opinion. For the future, this is what they're saying here. As you guys can see, this is once again double digit returns. We're not going to get too deep into the numbers, but numbers speak for themselves for Amazon. And we're looking forward to big things. And I really think that AWS is really going to be a huge driver for them. Looking forward, 2029, they're predicting. This is all from Chartmill too. This is another reason why I like using chartmill.com. Once again, I'm not affiliated with them. I just had access to use the site to break down analysis of Amazon here. And you can see the future revenue growth for the company. So 2029, we may see Amazon as a $1 trillion company. This is huge growth here of revenue. They're expecting big revenue, great EBITDA growth. Operating margins are expected to increase. And this is what we want to see here. Double-digit operating margins, year-over-year earnings per share growth. These are the things that we want to see, going into a company long-term, holding it for the next decade, at least 10, 20 years, and so on. Now, when you look up Amazon just in general, this is what the company's home screen will look like when you go to the analyst ratings. As you guys can see, I'm not just telling you guys to just pick up and buy the stock. We got analysis. 85% is, all in buying Amazon. As you guys can see, we have another target price here on the low side, 181, but we're already at 187. They have it as high as $525. I would love for it to get to that price, but I would take anything over 200. Definitely see it value right now under $200 because like I said, we're having a little hard time shares long term. And as you guys can see, here we go here, 2022. This is when Amazon was back at that 189 marker. We went all the way down to about $90, about $80 here in 2023. and it's been on a run ever since. Yeah, we have our bottoms here, but these are times to add to onto the bull run with Amazon. And guys, that is all that the dog had for you guys. Hopefully, I didn't bore you with my share buyback lecture. Let me know how I did with that. But I hope you guys enjoyed the video on Amazon and learning about the new Mag 7 if you haven't heard that terminology before. But thank you guys again for watching the video, liking, and subscribing. And if you have any questions, please leave it in a comment below. Or if you have a stock that you want me to go over in the next video, leave it in the comments below, and I'll be sure I will get right onto making that video for you and release it on the next time that I got some time available to make a video. But until then, guys, thank you guys again, and I hope you guys have a great weekend. I'm out.